Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. It is the week ending 11/22/07, 11/24. It depends on when you're watching this. It is the weekend after Thanksgiving. I know everybody's put a couple of pounds on after that. Go out, do some jogging, work out a little bit, get your mental conditioning, get your body conditioned, and then let's take a look at some moving averages here. I think what I would like to do on this is discuss the 200-day moving average and how well that 200-day average works with daily bar charts, with 30-minute bar charts, down to 15-minute bar charts. Sometimes it even works really well on 5-minute bar charts. But for me, 5 minutes is a little too shallow of a time frame for me to pull triggers. I don't really like to use the 5-minute bar as a trigger puller. So the lowest I'll go is to the 15. I try to even stay away from that. The lowest I really like is the 30-minute bar on a daily chart. You break it down to 30-minute bars, and then you overlay the 200-day moving average on that. And I think you will find that this is a very, very simple but accurate trading tool that will help you, and will put one more tool in your arsenal, in your toolbox of tools that help you trade, that help you check these markets out in a more, hopefully we think, higher percentage way of looking at them. When you are looking at charts, you have to realize that charts are a mere picture. They are a physical look into the mentality and to the fear and to the emotion behind traders. The charts on their own accord would not work. They don't work. They're actually meaningless on their own accord. But the fact that those charts are created by bars that are created by people who get panicky, who don't panic, who jump in too fast, jump out too fast, move like the herd mentality. The Fed comes in and they have certain things they do. Big clearing firms come in and they trade certain ways. Well, all of that shows up as a bar chart, or as a point and figure chart, or as a candlestick chart. Whatever chart you like to look at that works well for you, it is simply a physical look at the emotions of most of the traders on the planet now that participate in our electronic markets. I have noticed that very, very, very many of them pay attention to the 200-day moving average. Sometimes it's a simple moving average. Sometimes I'll use exponential. And other times I'll mark it to the highs or to the lows or to the mid-range of the day. But nonetheless, it's a 200-day moving average that gets me going. So take a look at this, traders. I'm going to put up the charts for you now and see what you think of it. Okay, traders, what you're looking at is the daily bar chart of the December NASDAQ market. This is the NASDAQ cash. As you can see, the 200-day moving average, which is what this video will be about. When it holds, it seems to hold really well. When the market gets above an average, it seems to stay above that 200-day average. We had a one-day crossover into it, popped right back and got above, and has not touched it since. It is a very, very strong average, traders. It is one that I would appeal to you to put up on your charts. Take a look at for yourself. You'll see after the next few charts, it is a very convincing average, and it works in multiple time frames. Let's look forward. Next, you're looking at the cash S&P market, the SPY, if you will. The 200-day moving average. And it really, really seems to work well in the indice markets, and you'll find it works in other markets very well. You got close to it here on that day, or back in March of 2007, never hit it. Once we started to hit it here, you had a major breakdown through it, traders. A major breakdown took place here. Then finally you got above it, and you had a new high set. Then we pulled back, we've gotten below it, and we have stayed below since. This is where we are today, here and now. The market has gotten below the 200-day. When you see, if you notice, when it gets above a 200-day, it stays above. When it gets below and starts settling below a 200-day, generally you have a bearish market. Now, I've noticed that we are below the 200-day in the Dow futures and the Dow cash and the S&P futures and the S&P cash, but the NASDAQ is still above the 200-day. So there's a bit of a controversy taking place in the 200-day average between the large cap and the small cap stocks, but nonetheless, the average is still working well in all of those charts. Let's look forward. Okay, traders, the Dow Jones cash market, once again, back around March of 07, you started to get close to the 200-day, but never got there and had a major rally. Then, in August of this year, we got down to the 200-day, but it was a one-day break, right back above and off to new highs we went. Lately, we have come down, went below the 200-day, went back above it and tested, failed, and broke below and have been below since. The S&P and the Dow Jones, the E-mini Russell, many markets right now, many of our indice markets are below the 200-day moving average. And you will see as I pull more charts, it works in other markets, not just the indices and other time frames. We're still looking at dailies right now. Here's an illustration of the 200-day moving average, and maybe we should call it the 200-bar moving average, as it will apply to other time frames. Right here you have the 200-bar moving average. This is the oats market. Nothing to do with an indice, right? The oats market. Comes down, tests the average, pops. Comes back down, tests the average one more time, and never looks back. 200-day moving average. Very strong, traders. You'll see there are more charts coming. Or let's call it the 200-bar moving average, as I said. Because now we're going to move into a smaller time frame. Okay, traders, here you were looking at a 30-minute chart. 30-minute chart now. This is a 30-minute chart of the Canadian dollar. This is a 200-bar average. Look at how you get close. You fail, you stay below. Market comes down, does a little work, gets back there again, fails, gets back below. Stays below, gets up there, fails once again, and then works its way back down. That's on a 30-minute bar. This you can use as a trigger to pull the trigger on your trades. If you want to be a seller when it gets into the 200-bar average, you sell it. If you happen to be above the 200-bar and came dropping down, right about here, you'd become a buyer. The 200-bar average, traders, it is used by some of the best clearinghouses on the face of this earth. It is used by Washington. It is used by our government when they're watching markets. You will find that that is true, and you will find it becomes a self-fulfilling prophecy because of how many traders pay mind to it. Now, the 200-day used in a 30-minute situation, let's look forward. Okay, traders, here we are again. This is a 30-minute bar chart of the British pound, or the cable, if you will, with our famous 200-bar moving average. You got close to the average here. Market fails and breaks down. Gets above the average in around 6 a.m. on Tuesday. And look at the rally that takes place. Big rally. Works above here, gets down, tests it once, and look at the rally that takes place. Comes back, fails a test, and rallies again. Finally, it gets through, and look at the dip you get when it got through. That is on a 30-minute bar, traders. It doesn't get much easier than that. If you are looking for trades throughout the day and you're not quite sure what's working in any market, put your 200-bar average across a 30-minute chart and find a market that it's working in and trade the market that day. It works on dailies, it works on 30 minutes, and soon you'll see it works on even shorter time frames. But bear in mind, the shorter the time frame, the less of a signal it becomes. If you're using a 5-minute bar, you may only get 10 minutes below the line and right back up again. So think about the size of the chart that you're going to put it on. On a daily, it's the greatest signal that you're going to get. On a 60-minute, it's a fantastic signal. On a 30-minute, it's a good signal. On a 15-minute, it's an okay signal. On a 5-minute, it begins to become a signal that you need other indicators wrapped around it to let you know if you should be pulling the trigger. But nonetheless, the 200 bar moving average works really, really well. Okay, traders, next, this is the E-mini Russell December 30-minute bar chart. 30-minute bar, 200 bar average. Nice sound there. Hey, you like the sound effects?
I like the sound. Sounds like my
All right. You got up to it here, broke down, tested it, failed, tried, never even got close the whole rest of the day, or 2 days this is. Finally tests it one more time, gets above, and look at the rally that has taken place since. It works really, really well, traders. It is a simple technique. It is not, by any means, can I say this is something that I found all by myself. Many, many traders out there are using it. Many analysts are using it. And it makes sense for you to use it if the many other people out there using it. So, the 200 bar moving average on a 30-minute, on a 60-minute, or on a daily, so far I've showed you all well. All of these work really, really well. So, take a look at your time frames, take a look at your average, your 200 bar average, and tell me what you come up with. There is more. Traders, again, this is the E-mini market, the ESZ7 on a 30-minute bar. This is the last 30 minutes that this market traded, or at least the bars representing each 30-minute period for the last few days. As you can see, the market got through, broke down nicely, got back to it, and failed. 200 bar mover. Then it breaks down, gets back up to it, and fails again. Then look at the move. Down, down, down you go. You go up a little, you get near it, a failure, down. It just continues to stay below. And then finally, at the end of the day on Friday afternoon, the market gets above it and has a little bit of a spike rally. Look at how well that worked. It is chart after chart. I showed that to you in currency markets. I showed it to you in the oats or other, you can find it in other grain markets will work well. And I'm showing it to you in the indice markets. It works really, really well. This is a 30-minute. Let's go take a look at another time frame. Traders, you are looking at bonds on Friday, Thursday into Friday. This is a 15-minute bar chart now. 15-minute bar chart of the 30-year bond December contract. And look at how well the 200 bar works on this. Failure to get below, rallies nicely. The average continues, the market moves, fails to get below, rallies sharply. Gets back there again as the average continues, fails to get below, has a major rally. The average continues throughout the day. The market spends some time sideways, comes back, touches the average, can't get through it. Wow, big rally at the end of the day. That is very interesting to me, traders. I am sure you find it interesting as well. Do your homework on this. Put up some charts. Use that 200 bar average and come back to me and tell me what you have found out. Okay, so you've seen the charts. You see that 200-day moving average? It worked on a 30-minute, a 15-minute, on a daily. It works on a weekly. I showed that to you in a grain market. I showed it to you in currency markets and indice markets. 200 bar moving average, traders. Put that up. Take a look at it for yourself and put it in your arsenal. Put it in your toolbox because I know it works really, really well. And I love to present indicators of this nature to you on my weekend webinars because it gives you a couple of days to study and it's something that you'll get to use next week. I will be watching that 200 bar average on every one of those charts I showed you, plus 30 or 40 others that I will look at and study. And when we get close to that average, I will be pulling the trigger, just like you're supposed to do. No emotions at all whatsoever. And you will learn that with us traders. Techniques like this and many, many others are what we do every day as we hold our daily analysis classes at our site. They are wonderful, traders. I do what I just did for you on those charts, but I do it live on my desktop, and I share that desktop out so it's on your computer desktop when you watch me do it. I'm on camera and microphone. It's a good 2-hour session every day that we take a look at markets in that form, looking at daily analysis. We even look at fundamentals, but that comes out in the charts, as you will find if you work with me. Let me tell you, you can jump on the bandwagon and you can come to those classes every every day. Just come down to our site at www.livewithoscar.com. You can get yourself a free, and that is F-R-E-E, a free silver membership. No credit card required. We ask you of nothing more than just put your email and your name in there and jump in. Come into the trading rooms with us. Come to the daily analysis courses. You can earn OMNI bucks, and I think I still have them in my pocket from the trip down to New York. We have OMNI bucks that we give away every time you post in our forums. When you post, you get 2 OMNI bucks. You can use those OMNI bucks. You redeem them for the daily analysis classes. And we also now have introduced OMNI slots on our homepage. OMNI slots, baby. I've been playing it. I've won a few bucks already. You go to my homepage, click on, the OMNI slots. Like any other slot machine. We are in Vegas, so why not go with OMNI slots? You click on it and you earn OMNI bucks. As you approach certain levels of OMNI bucks, you trade those OMNI bucks in for classes. And we have geared this towards you winning, not losing traders. So come there and try it out. Come play the odds. The odds are in your favor to give you OMNI bucks to get you to come to our classes. And all of that is pretty much free. All you got to do is show up during the day. Now, of course, there are other products that you can buy from us, and you can upgrade to premium trading rooms, which is a fantastic way for you to spend your day if you're a professional trader or a trader looking to become much more professional. In the premium trading room, we are putting on trades and taking off trades as they happen during the day with me on 3 cameras and a microphone, and everybody in the room working in unison with one another. And that is a fantastic way to spend your day and to educate yourself. But if you just found out about us, if you just found these videos and you don't even know where you found them, come down to www.livewithoscar.com, get a silver membership, and jump into... And I keep pointing to the spot that I've erased 100 times. But not only do we have premium trading rooms, but we have live open trading rooms where there are traders from all over the world that come in and just chat with one another. And the influx of information is unbelievable. The exchange of information is really, really great. And I jump in and out of that room all day long, so I'm there with you as well. So come on down to the site and don't spend your day alone anymore. Don't sit at home on your computer doing nothing. Come to the site and spend the day with the rest of us. There are omniacs all over the planet that come to the site every day, so you do the same. If you'd like to give me a call anytime, day or night, 702-629-4755. If you've looked at some charts yourself, you found some images, mirror images, you name it, you found the formation that you would like for me to check for you, or you've looked at the 200-day mover and you've overlaid it on a chart, if you'd like to send that chart for me as homework, consider it homework. As your teacher, I will evaluate that homework and send you back a reply. So please send me emails at oscar@futuresanalysts.com, and we will help you. We will evaluate your homework, send it back to you, and tell you what we think. And once you interact with us that way, you're with us. You are part of our crowd. You become an omniac, and you are welcome here every single day. We welcome all traders of all shapes and sizes. Whatever market you prefer, stocks or commodities, you are welcome here at the Omni Trading Academy. All right, traders, don't forget to do your own homework. Always, always do your homework. Don't even believe me that the 200-day average works, because maybe I'm a liar and it doesn't. So do your own homework and check for yourself and make sure it works. Don't ever take anybody's advice unless you've checked it out for yourself and you've studied it and you're convinced that this person possibly has something here which coincides with your work. Then go with the trade, because there is no holy grail out there, traders. I've seen sites where people say for $395, you can buy my program, plug the program into your computer, and you'll win every day. Bull crap. Let me tell you, it does not exist. It does not exist. If it did, I'd own it. It doesn't exist. Take my word for it. I've got nothing to sell you that way because I know it doesn't exist. And this is 26 plus years of trading telling you that. So don't be fooled by these ads. If you want to learn, you have to do it yourself, and we're here to help you do that. So come on down to the site. All right, traders, say this to yourselves every day. Make sure you say it on weekends, say it in the afternoon, say it in the morning, say it while you're brushing your teeth, say it while you're laying in bed sleeping. Train your mind to do it subconsciously, because it will help you. And don't forget, traders, you know what I'm going to say next. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.